Alrighty, Doc here from North America. Good morning, good afternoon, and good evening somewhere. It's Friday already. A lot of you out there are enjoying the TGIF already, whereas here in the States we're watching the market just kind of vacillate back and forth. It's not sure if it wants to go up. It's not sure if it wants to go down. It's just, I mean, the Fed keeps on plowing the capital into this market. It keeps on plowing it in. And, hedge funds have free dollars, and profitable hedge funds, billion-dollar hedge funds, have free money from the Fed overnight, every night for years now. And so, when the Fed keeps on plowing money like this into the marketplace, it is awful hard for it to top out. Now, you have to imagine we have, an election coming up in 6 weeks, and there's a lot of frustration by the Democrats, the party in power for like the last 120 years or so, at this point, 140 years, right around there. Ever since the 1880s, after the Civil War, it figured a way it lost the war, but it found a way to take control of the Republic, and it did, and we're coming to the very end of that after 140 years. I know this must sound insane. I tell people this all the time. But, they've taken power and leverage every direction to hold on to that power, and the population dislikes it. And what have they done this time around, these last 4 years? They opened the borders and allowed anybody and everybody in illegally. 25 million people are now in the country. And they're at the point now where they're even flying them in. You can apply on a website, a bunch of different countries, like Venezuela and so forth, places that we don't get along with, and they're flying them in. In other words, they're trying, you get rid of the population, we're 360 million people, and they're trying to figure a way, how do you get rid of enough of them so that they can still hold on to power? They're doing everything they can, and so, the Fed, people are scratching their heads on a second day now, I guess you could say. The Fed lowered the interest rates down 0.5 percentage point on Wednesday, and they're scratching their heads going, wait a minute, this doesn't make any sense. Inflation is still expanding. It's just expanding slower. The stock market is at all-time highs, and the Fed lowered interest rates 0.5 point. A very dramatic drop percentage-wise. One of the biggest, largest drops ever in history in relationship to the idea that it was at 4 3/4, and now it's down to 4 1/4. It's a big drop, and people are confused. They don't understand, and I hear money managers now everywhere, and you see Goldman Sachs and a lot of these brokerage houses who normally talk their book, basically saying, be careful. Things are overpriced, and that's exactly. Hey, Robin, how you doing? And I've got it all fixed today. Got it finally fixed. The old platform is fixed, but you know what? The new platform is telling us how more accurate it is to the old platform because of that. Isn't that amazing? So I'm really comfortable with good to go now with the new beta platform. I feel very comfortable with it. There'll be times where there's some problems. But overall, I'm sure a back month will straighten things out the way it needs to. And the front months may see some less liquidity, which makes them sloppier. But overall, I am yo, 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 and go, go, go. So anyway, the markets are totally 100% confused. The money managers say this makes no sense. They're telling people don't buy the dips at this point. Just sit to the side, let it digest this whole move. I understand that they're because of the 0.5% cut, they're looking at the Russell 2000 more closely now, because it opens the door. You remember those types of stocks, the most speculative stock, the companies that are most speculative. In other words, are low priced, low capitalized. benefit greater with lower interest rates. And so they're basically saying people need to now relook at some of these low cap stocks that are in the Russell 2000 because there's just less cost to survive. In other words, they have a longer longevity. I know it sounds very Darwinian in nature, but that is part of the function of the managers. They have very few fundamentals left that they can trust, and so they lean into them very heavily. And so that's an interesting point of view. Look at things, and you can see the same thing. What happened to let's put up on the screen. Let's put up on the screen. I'm going to go to the beta first on this one. Let's take a look at the QQQ, the NASDAQ 100, or better known as the Tech 100 over on Dukascopy's platform. And you can see yesterday's action there. Right there, you can see the big gap up. And at the same time, you can see our algorithm is saying, not too happy with it. Notice it's in a daily sell for those 2 days right here and there. And that's not today yet because it's not, it's not until the New York Open does that get going. And you can see here we are in the weekly buy. And so you can't short it. And it's kind of telling you from this nice move here just to be neutral because it's not making sense. And at the same time, the mechanics of the market. We talk about that here. The technical analysis is one thing. The actual physical mechanics of a market, in other words, PEs, the fundamentals. The fundamentals are the mechanics of the market. They're the foundations of a market. The technical analysis is the second derivative in a sense, or the second what's Bollinger call them? What does he call it? Not derivative. He calls it standard deviation. The second standard deviation. It's another mathematical term. We use it in physics when we're looking at quantum mechanics. And no, actually, it's the part of the Monte Carlo statistic combination, stochastic and moving averages and so forth. What they do is they try to smooth out the actual number through averages to look at a more smoother pathway. In other words, the lines are clearer, so it cuts down on the squibbles, the ups and the downs that we show you with ours, and then at the same time, there's the ups smoothed out. This is the downs smoothed out. The ups smoothed out. Same thing, so forth and so on. Whereas when you look at the actual number, which is right here, it's like, oh, okay, that's a little bit different, isn't it? You can see the smoothing out going on here. So when you look at the physical mechanical side of it, what do you call it? The fundamentals that you're looking at profits, earnings, PEs, price, profit and loss. You're looking at the multiples of those combinations. Where you get a ratio. You're looking at all those mechanics. Right now, we're finding overall market is way overpriced. And at the same time, the Federal Reserve is rewriting the book on how they're doing things, which is very confusing since they don't seem to have a good grip on inflation to begin with. They called it for almost a year and a half transitory and didn't respect it whatsoever. And so now, you look at it and you go, well, what do we do with it now? It's like, so what have you done for me lately? That's the classic of the financial markets. That's the way they usually work. So what have you done for me lately? And right now they're looking at it and they're saying this makes no sense. It's overpriced. And, and it's like, usually when overpriced things go on, it kind of clarifies it in the end. There's it will sell down over time. In other words, when things become overpriced, money managers basically close their wallets. They don't open their accounts. In other words, their bank accounts and buy more. Instead they move the deck chairs around on the Titanic in a sense, and that's what we're seeing here. All right, I think I've gotten my point across here. So let's go. I hope I got my point across. If it doesn't make any sense, please say, Doc, explain to me what this means or what that means or moving deck chairs around on the Titanic means, and we'll make it as best an answer as possible. So let's see. Let's get over to the dollar index and see what that dollar is doing. Obviously, that was one of the things that really made people scratch their heads was the Fed lowered rates a half a percentage point, which we assumed on Wednesday that it was in the market already because we've seen the bonds. Let's see if we can get a bond up there first, and then after the bonds, we'll go over and take a look at the dollar index, and then we'll look at the currency pairs. Unless someone, out there would like to see something else. So let's go find the 10-year bond, which is ZN. There's ZB. Let's go look at the 30-year bond. Here's a 30-year bond. And you can see when the price of the bond goes down, the interest rates are rising. Well, gee whiz, why has it been going down now since Tuesday? Day before the announcement by the Fed. And then that was the day of the Fed. And then that's the next day. And today it's lifted up a little bit. And you can see 3 days in a sell since Wednesday at the same time. And you can see it's here on the weekly basis. We've been in a weekly buy for over 3 weeks. So, and you can see that strength overall being up. That's that smoothing out, like the stochastics or the moving average, or our Doc's mathematics. Now let's go take a look at the 10-year, see how that looks. ZN again. We want to see ZN. There it is right there. This is the 10 years, and they're trying to, they're saying, wait a minute, now look at that nice gap up this morning, and it's 4 days in a sell. That went into the sell, okay, on the Tuesday, and you can see even back last week on the Friday it went into a sell, and then tried to get back into it, but with the red dot, it was telling us to still expect weakness, and sure enough, it came. You see, it's also 4 weeks, not 3 weeks in a weekly buy. So markets have been, the price of the discount cutting of the interest rate we knew was in the market. We knew that part. The bigger question is that why can it not have follow through? 52-week pips copper price, please. Sure. Let's see, 52-week pips. Let's take a look at copper. There's copper and pips. You see we've been in a daily buy for a bunch of days here. There's copper right there. What is that? That's 3, 6, 8 days now on a daily buy. And it went in and out of the weekly, which was interesting. It was in that weekly self throughout most of this move here, and then finally went back into the weekly buy this week, right in here. So it's interesting. It rode its way all the way down. Then we went into the daily buy, telling us to be cautious, do not be short. You could be neutral at this point. So you caught this ride. That was the winner chicken dinner out of our math. This one here is telling you not to be short anymore and to stand to the side. And that's what it did. Now, if you're a producer, like a mining company, or you need to always buy copper, that's a whole different story. Because that means you need to have inventory, and even when it says that it's neutral, you need to, on a short-term basis, day to day, of course, know that you need to try to purchase some. Now, if you're just a trader out there trading, you don't really care if it runs up and you don't make money since you just made money. The idea is to keep what you made in your pocket, and that's the name of the game there. So 52-week. Glad to give you the answer there. All right, so where was I at? What was I thinking? Oh, yes. We were heading towards the dollar index. DX. Right there. Give it a quick spin. There it is. And there's the DX. You see, as interest rates dropped in the States, the dollar index went down. Notice it seems to be trying to put a bottom in here. It's been in a daily sell now for 7 days back into here. Is that right? That's the 13th too, right there. Yeah, that's the 12th. So it's been in a sale since right there, the 12th. At the same time, it had climbed back into the weekly buy. Now it's back into the weekly sell with no problem. Pressure has been, you can see with the dollar index, it's found a way to go down, come up a little bit, go down again. It's pretty much been in a weekly sell back since the week of, what is that right there? July 5th. So since up in here, it's been in that weekly sell. And then finally last week, this pushed it into the weekly buy, but we were in a daily sell all that week from the 12th in here. And then there's 11th, 10th. What's that? That is the 9th. Okay, so most of that last week, while it was in a weekly buy, we were in a daily sell. So it was like, don't be so brave to be long it. Again, if you're a trader, it's who cares if you don't make money on a given day, as long as you don't lose money. Always want to try to keep the money you make. Now, if you're a bank and you're trying to move inventory and try to cover customer risk and so forth, then it's a whole different game, a different strategy. We try to explain that here. And Robin and I have almost 100 years of experience between the two of us. And so we can pretty much give you a good idea what's going on and how to hedge yourself, or what to look at, or what you need to know, or what would you like to, what would be a good question for you to ask, depending on how you use the market itself. That's the key there. Always, how do you use the market? I think I want to use that as a headline today, since this is Friday. I like my Friday headlines to be very passive and fun. I think markets. How do you use them? I think that would be a great title for today. So I think I'm going to put that in there if I can figure out how to get there again. Let's see if I go like that. Does that do it? No, it doesn't do it. Get rid of that. How do you use it? I want to do that. I want to use that line right off. I'm trying to get there. I don't want to know about the latest weather. Bloody phones. No, that's not there. Where is it? Where is that app? There it is. WhatsApp. I had to go the 20 miles away to get it. There we go. Let's put that in there. We're going to put the title in already. We got a title. I like that. Nothing better than having a title. All right. Today's title. There we go. And let me see now if I can remember how I said that, because my mind is running in 5 directions all the time. Markets. How do you use them? That's what it is. Markets. Comma. How do you do it? Sounds like something from South Philadelphia. How do you use? How do you use it? There we are. That's the title today. Markets. How do you use it? That's what it comes down to. All right, I feel really good about that one. That's really cool. See, that's all because of 52. 52 asked me a question. I thought about it, and I thought, how do I know how much 52 knows or doesn't know? How much can I give him in a short little blast of a sentence or two, or five, to give him opportunity to benefit from our experience? I mean, you gotta imagine how easy it is to do this webinar. It is really easy to do. It's not hard for me to do this webinar. It's like swimming in a nice swimming pool that you can never drown in. As we sip our tea there. Okay, today's expect temperatures. I don't know why I'm getting the weather. Maybe I can turn that freaking thing off. Let's see. Widget setting. Don't allow. There we go. Continue your device will need to use location. No thanks. There we are. All right. So. Get out of there. There we are. So now from there, where would you go? We were at the dollar index. Let's go over and take a look at the euro. Let's take a look at the euro and see what the euro is up to this morning. And we'll switch screens over there. Mr. and Mrs. Mouse and all the little mice. And there's the euro. Look at the way that euro yesterday dipped back down again. Oh, I have a full-time job and trade part-time. Cool. Very cool. Very, very cool. And I have a recommendation for that. I don't know if you ever heard of them. They're called listed options or binaries. And if you do that, they're a good tool to use as a part-time trader. Yeah. So I'm glad you responded back. Thank you, 52. All right. So you can see here, look at the way the euro, the euro took yesterday's this was Wednesday. And you can see it launched itself, and then they sold it down. Then yesterday, going into the European hours 2 days ago, sold it down at night, and then finally lifted it up by the end of the day yesterday. And then today, you can see it's just a little bit firmer. We've been in that long weekly buy from all the way back in the 108 area. It's even underneath the 108 area. And, it's been a very interesting situation, especially these last, 7 days? It jumped into the buy again. Told you it was all clear to try to be long. Look at it, it gained. They knew that finally, the Fed was going to give more free money out than usual. That's what it comes down to. Hey, how about instead of you having one free ice cream, let's give you two. You're going to have two free ice creams for today. I only have two hands. Well, that's quite all right. Maybe we'll give you a third. You stick the third one in your mouth. What happens when they give you too much free stuff? You choke, don't you? Anyhow, you can see that they knew that, and we talked about it forever and ever at nausea, that they were going to lower rates. And I kind of fell into the pattern that the market was acting way too happy. That I thought, oh my God, they're gonna give us a half. And sure enough, they gave us a half. And you can see the when they gave us that half, they spiked the market up, and by the end of the day, it was unchanged. And they took, on the Dow was down 100 points, and then the rest of the world said, "Woo, free money." Got to jump on that, I'm getting 2 ice cream cones today when the truck pulls over, and it's both for free. I mean, normally when the truck pulls over, they give you a small popsicle for free. They give you a little ice cream for free, but oh no. On Wednesday, they had to give you two ice creams for free. And get you excited, get you juiced up on that sugar. And so the money is the sugar. Sugar. So fly. You're so fly. So anyway, you can see there they smelled it. And it's amazing. and in some ways it's not amazing. That is the cable. Look at the strength in the cable. Now I've talked about, when people talk to me about, I'm gonna drift a little bit here. When you talk about the cable and people ask me about the British pound, I tell them that the British pound and the British economy have been tied to the United States forever and ever. And up until World War II, they were the world reserve currency, and then we became the world reserve currency. And as big or as small, let's put it this way, as the size of Britain and then some of the other countries in the world, Britain is more invested in America than any country in the world, even the Chinese. I mean, they're deeply invested. They've always been deeply invested in America. They always will be deeply invested in America since it was our mother country. And they know a good thing when they see it. So that does not surprise me when the Federal Reserve drops rates even more aggressively and tries to give you 2.5 ice cream cones for free, no less. Not just the little popsicle that they were going to give you every day for free, but the 2 big ice cream cones with big piles of ice cream, and probably one of them even has a cherry on top of it. And so it doesn't surprise me in many ways that the British pound is acting extremely strong against even the euro. Now we can take a look at that in the pairs trade of the euro GBP, and you can see it's been moving down, especially these last 3 days. So it doesn't surprise me in a lot of ways, but it does surprise me in the sense that they're all hooked on the drug. We are the drug dealer, and the rest of the world are the addicts. They are the junkies. We are the drug dealer. And who knows, at night, when the drug dealer goes home, it puts a needle in its arm too. And so, the only difference is that they can supply the inventory, and the poor junkies have to do song and dances and do all kinds of things to get their feed. So, it's not a surprise, but it is a surprise. You know what I'm saying? I've always expect to see underlining strength in the cable. Always looking for that underlining strength, and it's usually there. And that's the reason why, because it's more connected to the states than people realize. Financially. And so, you can see it here. Taking out, just last week's high. Or last month's high, last month's high in August. Whereas the euro, let's try that one more time. Whereas the euro is battling to get through last month's, still a little underneath it. And hence, the euro GBP pairs trade is basically, sitting there going, as this American drinks his cup of tea. Yeah, saying, Now, again, we're on the sugar high because the power that has been in power for 140 years or so is losing power. It started under Ronald Reagan. He flipped the South Republican. Remember, they used to call themselves Yellow Dog Democrats. Yellow Dogs were the most extreme. What they meant was, I'll hold my breath until I turn yellow. And then after a while, the Blue Dog Democrats came along and said, I'll hold my breath until I turn blue, which is what, death? And so, when you die, you're blue. And so, now, after the Northern Democrats tried to destroy Jimmy Carter's administration and did a pretty good job at it, the Southerners said, I think I'd rather be with Ronald Reagan. And so they switched parties. And so the South is still ruling, only now they're following the Constitution and the party that actually started the Civil War against them. So you want to talk about confusion, you want to talk about where we are going in this world. Sometimes you got to really wonder. But one thing is for sure, they're trying to follow. They're falling back to the basics. They're going back to the schematic. The schematic is the Constitution. So they're falling back to that, and they're saying, okay, well, let's follow the Constitution. And so the South has become a very constitutional political structure. The whole South, to a great extent, is Republican now. And now you're seeing it move. And as a old political hack that I am, I've been a campaign manager and a chairman of the party and things like that, and all the way up to the edge of Mr. Trump, and before that, Mr. Reagan, and so forth. I can see that Mr. Trump is campaigning in Democrat territories with no problem, which says a lot. You do not send the Republican candidate to go campaign in Democrat territories. You send them to the Republican territories to keep the base firm. The base is so firm at this point, he can spend the time campaigning for opposition votes. And notice that Ms. Harris is doing the same thing. She's campaigning in Democrat territories to shore up her base. So, in other words, her base is not solid. And so I do believe Mr. Trump is going to win. I do believe we're going to see a better economy globally because of it. And just like we did 4 years ago when he was the president. Only this time we're not going to have the coup d'etats that we've been having. You can see they've been using the FBI and the Justice Department and the media to beat the daylights out of them, they say there's up to 5 kill teams out there for them. They've imported 5 different. Let me see if I'm going to put it up on the screen here. Let's see, where is it at? They say this is from the Congressional and the FBI or Homeland said that there are 5 kill teams out there, foreign kill teams trying to kill Mr. Trump at this moment as we speak. Let's see, I'll find it in a few seconds and actually put it up on the screen. I'll show you where I derived that story. And, it's like, are you for real? I mean, do you understand what's really going on? I mean, is that a fact, let's see, we'll find it in a few seconds and put it up on there. Here it is right there. DHS came up with it. Here it is right here. So when we look at the interest rate cut, I know this is like a long-winded story. When you look at the interest rate cut of a 0.5 percentage point, it says more than you realize. And it's doing a lot more calamity to our marketplace than you realize. Representative Gates, Department of Homeland Security knows of 5 assassination teams targeting Trump. Made the startling claim Thursday that there is at least 5 known assassination teams in the U.S. conspiring to assassinate Donald Trump. Well, 2 have already tried, that's for sure. Told the news at Breitbart, and a senior Homeland official told him about the 5 assassination teams conspiracies before Sunday's latest attempt on Trump at his West Palm Beach golf course. 3 of them that we know are foreign in nature. 2 of them we know are domestic in nature, and that calls for a force protection that we do not have around the former president right now. They've put a force protection now around him. 3 of these teams are foreign inspired from my understanding is Iran, Ukraine, and Pakistan. And the work is obviously challenging to protect protective detail like a presidential campaign that is vigorous and out campaigning. So it says here, Sunday's would-be assassin may have been the Ukraine-inspired conspiracy. Okay, that makes sense because he was connected to them. This all ties into the interest rate cut. I notice, it's a long way around, and I know you want to say this sounds like Conspiracy Inc., but it is what it is. And I've been doing this for a long time, politics over 50 years. And I've been saying this for a long time. This has been my mantra for decades that the South is coming to an end finally. The rebels of the South who have controlled the Republican Party and the Northern Democrats for a century, that it's coming to an end, and they're not happy about it. They're picking up arms at this point and attacking, the opposition any way they can. any way they can. So just a fact of life there. All right. So from there, let's see. What do we do? We got. We're looking at the euro. Let's put the euro back up on the screen too. Let's go to the next currency. Let's go over to the Swiss. I was a little surprised, like I said, about the Swiss. Now you can see there, it's the second day there. You see our algorithm's bending over a little bit, but it's been in a long. Let's see. Let's look at the spreadsheet. You're looking at 16 weeks now. This will be a 17th week in the sell. So they're not exactly beating. They're not throwing their Swiss francs or saltines out the door to buy dollars. It's just profit taking, opportunity. That's just the way it always works. Remember, traders, I've explained how money managers manage money. I've shown you here off and on throughout the years. And, months ago, weeks ago, I always get into some conversation about how they do it. And what they do is they rotate. They put a fund together with 2.5% of every product, or 2% of every product, or depending on the size. If it's a $2 billion fund, then they usually do 2 to 2.5% of each product, and there's usually anywhere from 25 to 35, right around in that. It could be 27, it could be 31, it could be right around there, 33. And so what they do is they rotate in and out of it. And so what goes is that if you have a stock that you have 2.5%, and the thing runs to say 3.25%, they'll sell the 3/4%, bring it back down to 2.5%, and vice versa. If it goes down to say 1 3/4 or 2, they will buy a little nibble on it to get it back to the 2.5%. That's like buying low, selling high, buying low, selling high, buying low, selling high. The basics. Everybody recognizes that concept: buy low, sell high, and so. Right now what we're seeing is the rotation. We're seeing rotations go on. At the same time, we're in a situation where the markets basically, are getting lower interest rates. When they get lower interest rates, it changes the percentage. It forces them to do things. They have a manifesto. They're incorporated. Every incorporation has a legal manifesto. It must be honored. If you don't honor it, you'll get sued by your investors. Doesn't matter if you're up 25% for the year. They'll sue you anyway, because it's easier to make money suing somebody than it is to investing. So they'll get the 25% and they'll sue you at the same time and get money from you because you broke the manifesto. So they've got to trade inside that manifesto, and everybody pays attention to that. So that is the answer to it all in the end result. And so let's see what Kenny's saying. Kenny's up on Business Channel. From Slate Stone Wealth Management, Kenny Concardi, sharp guy, is usually wired in very well, understands the markets. They say interest rates are too high, yes. But this give and take of the moving it back and forth thing is a political thing. Yeah. So, yeah, Kenny is sharp. So anyway, that's where we stand now with the market. And the market is trying to figure out what to do next. And most of them in corporations, the manifesto tells them what to do next. And so they have to buy even when they don't want to buy. And they'll go and sell calls against it. They'll do something else that will try to work on the opposite side of it. And they're allowed to do that. But if they don't buy when their incorporation says, the manifesto says, get long, they'll get sued. So, the Fed knows this stuff. Not only does it know it, it floats free money overnight to the funds and leaves it there. And they tell them the next day, don't worry about it. You can keep it again as long as you're doing the right things. And what are the right things? Buy stock and hold it. See, that's what they're trying to do. Is they're trying to make sure that that there is an investment going on constantly. They don't want the stock market to go down. They want the stock market to go up. And they're not going to do anything but keep on pushing it up because voters have their pension funds and everything invested, and they want them to be happy. But they're not happy because there's a flip side to this, and it's called inflation. And that's what the problem is. The inflation is eating up the profits, and so the Federal Reserve is trapped. It's got its back against the wall. And so that's why they did the most foolish thing of all for almost a year and a half. Said, oh, don't worry about that inflation. Stop looking at the inflation. It's transitory. It's not something you're supposed to pay attention to. You know, just don't look behind the curtain. Just keep on buying. You know, and we're going to leave money around so that you can keep on buying. Remember, traders, you're invested in a retirement fund. Your portfolio keeps on going up in value. Gives you more buying power even if you don't sell anything because you can do it on the margin of the fund itself. And so the Fed, that's why the Fed really hates the idea of what they call free puts. And they used it to get rid of, on the COVID, to get rid of the put funds. They hate evidence. They don't like a lot of evidence. That's why they won't take an audit. They will only show you the one fund that they use, and then they have a balance sheet, and that's it. And there's another fund out there that we hear about, but we can't see. In that fund, I speculate, and a lot of other people do too, that it has Citibank bonds, and it has Merrill Lynch bonds, and it has Lehman bonds, and it has Bear Stearns bonds and Santander bonds, and it has Lloyd's of London bonds and Bank of Scotland bonds, and it has Barclays bonds in it, and it has Deutsche Bank bonds in it. It has all the things that have lost incredible amounts of money from the CDO disaster of 2008 and the election of Mr. Obama. And there's nothing we can do about it. And that's what the problem is. Mr. Trump is threatening to go back to the fundamentals. And that really, excuse me, really messes with the Democrats. They like free money. They want 2 ice creams when the ice cream truck pulls over. And they want them for free. They'll put up with the little popsicle once in a while, but overall they want that ice cream, free ice cream every day. All right, from there we'll go over to the Yenski. And there is the Yenski. You didn't know it was Polish. Yeah, it's the yen is semi-Polish. You can see it's their work ethic. It's Polish. And you can see right there it's been going up for 4 days now in a buy. It's battling with the overall downtrend, and you can see here, that was a great short, and then it told you right here, don't be short anymore. So obviously, if you sold it here, somewhere along this line, you had a chance to take a profit. Hence the keywords: take a profit. Money managers do it all the time. Every day. So don't get trapped into that let your profits run story. That's so 1975, before listed options. All right, so it's been almost 50 years now. It's been a whole new universe. All right, so from there we go over to, while we're here, let's go take a look at what the yen did last night. Not the yen, the Nikkei. Let's check out the Nikkei and see what the Nikkei did last night. I saw it was up, basically recoiling from the action that we saw. And there it is right there. And you can see, I can see, we all can see. It's really tight. It's in a sell here. At the same time, it's in the weekly sell right there for the last 3 weeks. Going back here, it's been in the weekly sell, been in the daily sell. So there was a lot of profit action going on all the way right there. It told you to start covering some of your lost gains, winners right there. And then you can see this action that's come here, and we can expand that, can't we? Yeah. So you can see there, that's a plus. That's a, what is that? Where is that? Why am I not seeing the numbers? There it is. Okay, so that's a minus. That's a plus. That's a 0. That's a minus, a minus, a minus. And then the news came out on the 18th, which is right there. And the 19th is a plus. So you can't be short there, that's for sure. Even with the red dot, it's telling us not to be. You see the weekly's been in that sell for the 3-week gig, and it's trying to work its way up. You see where it was long for 3 weeks there. Now over on the yen itself, you can see there's a lot of vacillation going on. You can see how it's kind of the other way around. The currency's been much more accurate than the stocks, and I guess that's because it's more of a global market. The currencies are traded by everybody, and actually, fundamentals lead the currencies to a great extent. People want to buy something from Japan. Japan wants yen. They like dollars, but they want yen, And so you have to convert your money and that type of thing. Whereas in the stock market, the stock market's an investment tool. So it has a whole different gravitas, I guess you could say. It has much more natural nature to it. The currencies. Currencies are the second most active products traded in the world. The number one traded product in the world, the bonds. That's why the Federal Reserve calls them the bond vigilantes. They hate it. They can't control them because it's an over-the-counter market, not a listed market. As is currencies is a over-the-counter market, not a listed market. But the Fed has fought very hard now that they've bankrupted half the planet, or if not 3/4 of it, since 2009. Since it's all pretty much bankrupt, they have to dance to the tune of the Federal Reserve. What else can we say about any of that? And this is why we're real happy with our beta, because you can look at each individual day now, put your little arrow over it, and realize, okay, there it goes into the sell just 4 days back. Then there's 3 days back. And then yesterday it pushed it into, I said, oh, no, that's plus now. Oh, yeah, that's right. That's a plus right there. So, it's a good thing that you can see the mechanics of it all. You see the mechanics from all that selling. There was the profit, winner, chicken dinner. Then it starts telling you not to be short anymore in here. In fact, I think that's the first one right there. It's 0 and a green dot. Tells you to take that damn profit. And then the next day it's a green dot. And it's at 0 again and says, take that damn profit. And then here, which is interesting, is because, there it is. There's the sell there. So it's in a sell there and a plus. How do I get that? Let's give it a refresh with the little circly thing. And that usually does it. So it was it was 71.49 on the 9th. There's the 9th, and it put it into the buy. So it said, hey, see all this money you made? Put it in your damn pocket. And then the green dots kept on telling you, no matter what the algorithm is saying, because that's the same type of algorithm, be flat. And at the same time, you kept on saying, well, it's in a sell, though, in a weekly sell. Why am I not short? Because it's green damn dots. That's why you're not short. And then finally on the 17th, where Uncle Sammy is getting ready to lower the interest rates, on the 18th, Uncle Sammy did, and on the 19th, Uncle Sammy already had, and today they are. So you can see here, it's minus for the 4 days. Now today, you see there, it's telling you, no, it's 84.66 yesterday. So on the 19th here, it told you again, don't be short. I don't care if it says the weekly sell. And I don't care it's a red dot. It's plus. It's a neutral again. Back to the neutral again. And then today you can see again, it's lifted up. And we have the 20th there. I'm not sure why the 20th hasn't updated yet. So, it's probably a plus. We'll see that tomorrow or later this afternoon, or who knows when it updates in the next few minutes. Could update. I'm not sure. Maybe we're just waiting for another tick to tick and it'll do it. And so maybe they're waiting for the U.S. market since it's the stocks. We're not looking at the currency. We're watching the stocks. So a lot of machines like to collect data at 9:30 Eastern Standard Time because, again, it's stocks, New York Stock Exchange, blah, 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 blah. All right, so what are we doing now? From there, we'll go over to the Great Experiment. Let's go over to the Great Experiment and see what they're doing today. How can you drive other people crazy? And there it is. Let's move it over. It's been in a weekly buy now for 19 whole weeks. There it is on the other screen. It's the Turkish lira. They've taken it up from the 34s to the 40 and hanging out up there in the 38s. Been in daily buy now for 5 whole days and 19 weeks. And you can see that on the spreadsheet right there. 19 weeks, 5 full days, going on a 6th day. It's like, oh man, smack-a-doodle-doodle. Smack-a-doodle to you. This is the 6th day now. Smack-a-doodle to you. If you live in Turkey, you're bankrupt too. Okay, and so that's what's really going on in the Turkish currency situation. We call it the Great Experiment because for some reason it's gone from 1 to 40 and no one seems to want to do anything about it. That's the oddest thing of all. Where is their central bank? Go hire a couple of Swiss bankers. It'll straighten it out quick. I've been recommending that the Federal Reserve hire a couple Swiss bankers. They seem to understand the market a hell of a lot better than the clowns in there working now. But anyway, it's Friday, so I'm being a little lenient on the insanity today. Let Doc out. Doc's loose. Janos usually says when I get loose like this, he says, keep it up. All right, so from there, that's pretty much it. It's Friday. I want to get out of here and go play too. So we got the markets to trade at this point. So this is Doc, and let's just show you where let's see. Always educational. Thanks. Well, 52 week. I'm glad I'm helping you out there. I hope I'm entertaining you. That's my objective. When I entertain you, I entertain me. And so here's the South African Rand. Boy, it's stuck in that box. And let's take a look at gold. Gold. And there is gold. You see, jacking itself up. It's rocking and a rolling and a reeling. Cancel. What is that? What's up with that? Oh, I see. What is it? It's just that needs to be moved. What is that? Huh? What is it? Blocking it. Remove. There we are. There we go. That's better. And so you can see here gold in a buy since the 25.50 or 40s area. And we are now trading at, got up to 26.44, basically 26.45. So we're out of here. This is Doc from North America saying happy trails to you until we meet again. That'll be Monday. Happy trails to you, to all our trading friends. This is Doc and Robin from Chicago Quant Technologies, sponsored by, or basically given freedom to talk the truth by Dukascopy. So, you want to hear the truth about the markets? Listen to this old cowboy. This is Doc saying happy trails. And have a safe and smart weekend. Ta-ta for now.